Well, good morning, everybody. Thanks for joining us here on the Market Day Report. I'm Marlon Bowling with you. I am joined by the one and only Brian Hoops, and he happens to be the El Presidente of Midwest Market Solutions. Now, he hails from Springfield, Missouri. Brian, I'm just looking at my email alert. I just got one from USDA as I came into the studio here, and it's related to an overnight export sale. I think you got the same message. What are we looking at here this morning?
Good morning, Marlon. Yeah, another export sale of corn, 137,000 metric tons sold to Mexico. So they were huge buyer this week of corn. And they sold a lot of corn earlier this week, followed up with another sale this morning. Most of this, about 2 cargoes, is for this current marketing season, and about 15,000 metric tons of the 137 is sold for the next marketing year. But it really kind of shook the corn up, or woke the corn up, that there is some demand at these price levels. And we've been talking for several weeks now that as we go through this fall harvest, it's a job of the market to find that price level that's going to stimulate demand. And it seems like we're starting to find it. We're not above $5, which is unfortunate, but we're in that $4.75 to $4.85 range. And that seems to be a price level that at least Mexico is going to start buying some U.S. products. And we have not seen many other countries step forward and do that. But it does tell the trade that maybe there's not as much downside weakness as some people had thought. There was a lot of people talking about sub $4 at one time. And maybe that'll be the case if demand backs off and we find huge yields. But I certainly think that, this market here with the EIA report this week being friendly, good usage of corn to produce ethanol, some stronger demand trends, that our downside is becoming more limited for the corn than maybe what we realize.
Is it possible that Mexico is stockpiling U.S. corn before their GMO restrictions go into effect?
Well, there's always that possibility, and they don't. We're in this kind of a disagreement. And there's an election coming out here, I believe, in Mexico in the next 6 months or a year, and that could have some major implications depending upon who's president and the policy that they take regarding buying corn from the U.S. and the GMO. So there's always moving pieces. No matter who we're dealing with as far as these trade agreements go and purchases. Of course, we have quarterly stocks report out today at 11 o'clock Central Time. Trade's looking for a little bit larger stocks compared to a year ago for corn, less for soybeans, and relatively unchanged for wheat. Historically speaking, corn has rallied the day after the report 8 out of 10 years. Wheat has rallied 6 out of 10 years. So that would be Monday, looking ahead at the calendar. And of course, we're probably looking at a government shutdown, and this may be the last government report we see for a while.
But if anything, this year has proved that it's anything but normal, right, when it comes to the market?
That seems to be the case. Yeah, exactly.
Okay. So just to reiterate, 137,160 tons of corn that were sold to Mexico overnight. We'll add that to the 1.66 million that we had. When was that? Monday? It was a few days ago.
Right.
So anyway, it should be a healthy report coming up in the next week or two on the weekly numbers. I do want to take a look here. Ahead of the quarterly stocks report, I want to take a look at our overnight trade. And in that corn market overnight, our quotes provided by bar chart here show that we were just fractionally weaker, not much. We had December down 3/4 at 487 3/4. Now on soybeans, you had November down 1/2 cent at $13 even. I mean, right on the money. So it's just really straddling the fence here. On the wheat in Chicago, December 3.5 higher. We're at 582 1/4 right now. So again, kind of in the middle of its trading range from overnight. Hard red winter wheat in Kansas City, December 2 3/4 higher at 687 3/4. That's about 3 cents off of its overnight high. In spring wheat trade in Minneapolis, you have December 3 cents higher, right at $7.50 even at the moment. And on the cotton trade this morning, we have December now 25 points higher at 88.96. It seems to be hugging that 89-cent level here the last couple of days. We'll be back. We'll talk more with Brian Hoops about the livestock trade, the outside markets, all that good stuff right after this. Well, let's go back to our talk that we have going on with Brian Hoops of Midwest Market Solutions. Tell you what, the overall economic news has kind of had the outside markets in a turmoil here this past week, Brian. Is there anything that they're going to be watching today?
Well, we've seen the dollar drop sharply for the second consecutive session. So gold and silver up big here this morning. Silver's up about $1 from its lows that it made yesterday. So some big moves there with the dollar dropping, and stock market is rallying here today. Gold also sharply higher, along with crude oil, which is holding some sizable gains after a couple days loss. Of course, we talked about in the first segment about the possibility that the government is going to shut down, and probably a likelihood that it will. And so, markets usually do not like uncertainty. And we're hopeful that we can reach some sort of agreement soon and get markets back to more of a calm nature and status, and looking forward to maybe more of a normal type trading pattern.
When's the last time we had a shutdown? Was that in 2018?
Yeah, I want to say it was, and grain markets, well, you and I have talked about how the export sales about a year ago, about this time, they were shut down for 3 or 4 weeks, and the markets did not like that, not having that type of news. But a full shutdown of the government, I think, was in 2018, and eventually it was resolved. And if we shut down this weekend, we'll likely get it resolved at some point, but neither side seems to want to blink at this point.
Okay, so the Dow is up 208 points right now. The dollar is down like 400 points. And as you mentioned, crude oil higher, gold higher, silver higher. Let's take a look at how we closed yesterday in the livestock market. That was a big rebound in that cattle complex after being so weak for a couple of days. Look at that. December came back $2.25 at 190.42. February over $2 higher on the feeders yesterday. They came roaring back. November was up 287 at 257.67. And on the lean hog trade yesterday, you had December up 275 at 75.52. Can we see follow through on that on any of the livestock markets?
Yeah, look at the livestock, cash cattle trade in the Southern Plains steady. The futures have put in a large premium again, anticipating stronger cash trade next week. With the Packers margins negative, I don't know that we're going to see stronger cash trade. Might be steady at best to lower. In fact, dress trade this week is at $2 lower in Nebraska. The hog and pig report out yesterday afternoon showed on feed or numbers kept for breeding, and all hogs and pigs larger than expectations. So I think we're going to give back some of that short covering that we saw in the hogs yesterday. We're going to give back some of that this morning just on disappointment over this report and what was said in its numbers.
Well, Brian, great to hear from you again. Thank you very much for providing all that insight into the markets today. That's Brian Hoops of Midwest Market Solutions. He is in Springfield, Missouri. And Tammy are in Nashville.